Hello, folks, and welcome back to another edition of the Cryptx Live Wire. Glad to have you here today. Nvidia earnings, kind of the story from yesterday. That stock, even though had pretty promising earnings and broke, expectations by all regard, still down about 4 to 5% today, with the Qs and other risk assets selling off. So, going to talk about that, Bitcoin, and much more. But Monte, good morning. How are things going, my friend?
Good morning, CJ. Things are going well. Yeah, lots to talk about. Like Mike points out in the chat, we got quite the range being established for Bitcoin here. And I want to talk about that a little bit, talk about some positioning data in terms of futures positioning, but also short-term holder cost basis, and just take a look at kind of where people are currently sitting from a profit and loss perspective. But I'm excited to hear your thoughts about some of the bigger names because, wow, what a false breakout in stocks like Nvidia and some other big names where, it looked like price wanted to go higher. Now today we're down about 5%. So coming back down to earth a little bit, and some of those big tech names that have been fueling this rally all throughout 2025 and the beginning of 2026. So excited to dive into things. If there's anything you'd like to start with, please feel free to do so, my friend.
Let's do it. Why waste any time? Let's get into Bitcoin.
Let's do it.
All right, so back to Bitcoin on the weekly chart, and just going to reiterate where we are in terms of the midterm year cycle. A lot of times during these bear markets, actually not many times, but every time in a midterm year historically, Bitcoin has found roughly two local bottoms in mid to late February and rallied into a peak in the first week of March. So, let's start all the way back in 2014, for instance. This is kind of a similar place to where we're at now. We found a low on the week of February 24th, and then we peaked in the first week of March at about March 3rd in 2014. So that's how that bear market rally ultimately resolved and formed the next macro lower high. When we go to 2018, had a very similar thing where early to mid-February, we created some local bottoms, but by the week of March 5th, price had put in a local high and never really traded above it for, another few months. 2022, very similar circumstances where, price puts in a local bottom roughly in, February 28th to February 21st, rallies up into the first week of March, experiences a local peak, but then, gradually falls lower. So that's kind of what we're seeing right now in terms of seeing a little bit of a local bottom get formed, at least in the short term. But I don't have a whole lot of optimism in this counter trend rally, just at least from the reaction, what we're seeing in other risk assets like stocks today. But if we just look at Bitcoin's midterm year, year-to-date ROI, we can see the red is 2026 so far, and white is our three previous midterm years with one standard deviation. And we can see that this is following this pattern very consistently, right? Like we usually put that local bottom in late February. And then on average of the three previous midterm year bear market cycles, price has found a local peak of this counter trend rally on March 3rd, or I guess we could just say the first week of March in general. So if we get up and continue this rally and price starts to fail on the 3rd, then I think that that's a pretty interesting place to potentially take a short, because the rest of the midterm year is historically very negative. But really all I have to say in regards to Bitcoin, and we can talk a lot about other stuff. I mean, crude oil had a really interesting reversal today, but in terms of Bitcoin, it's just following what it has always done in the midterm years thus far. And there's really no significant deviations from those averages yet. So,
Yeah, no reason to fight the tape and fight history. And historically, that's what we've seen. But, I want to talk about some more Bitcoin and kind of tie in that possibility of a brief reaction rally here with some more interim price action analysis. But you'll see here I have a line highlighted in red at about 89,000. And what that is the short-term holder cost basis. That is the average price of Bitcoin for short-term holders that they paid and are still holding right now down at these levels. And I think that what we saw here was pretty interesting. We had this yesterday, a very nice day of price action. But what you'll notice is we have this wick at the top of the candle here. Anywhere above 68K was sold into pretty hard yesterday. And not only was it sold into, but traders tried to get long here at the bottom and kind of play that reaction rally that CJ was talking about that we often see in the first week of March. But looking at the liquidation data, you'll notice that everyone that tried to speculate up towards 70,000 essentially got wiped out. And there are less shorts. They're a little bit closer to price in terms of liquidations. Those occurred yesterday. But you can see that people after yesterday's price action thought that, hey, I'm going to take a shot on a longer term Bitcoin position. These are 100x levered positions, and they all got liquidated, driving price down back into the 67K range. So we have two negative things hanging overhead. One being the short-term holder cost basis. I think that after yesterday's price action, if you're someone that bought up here, yesterday was not a bad day to sell and get out and, cut your losses, lick your wounds. I think that this was a good chance to sell into some market strength and ultimately take some profit and just cut your losses on what was ultimately supposed to be, your goal of 100K Bitcoin, which we never hit. So from a cost basis perspective, it's not surprising to see some distribution yesterday. And then also from a futures perspective, not at all surprising to see liquidations as traders got very excited that a potential local bottom was in, got long, and just got liquidated. So, taking a look at this chart here, we're pretty back to neutral here. The funding rate is relatively neutral. So price right now is going to be much dictated by spot pressure. I don't think the futures market's going to really drive price here, given that the funding rate is so neutral, meaning that there's an equal number of longs and shorts in the market. So I think that any directionality for Bitcoin is going to have to come from spot buy pressure. But the fact that we still have this overhead level of 89K being the short-term holder cost basis, I think is concerning and is cause for, anything above 68K to be sold into pretty hard by these short-term holders. So just some, interim positioning data there for Bitcoin that I thought was pretty interesting. But, nonetheless, I think we need to watch out for that possibility of a reaction rally for the first week of March. But after that, I think that, that'll be an ideal time to short the market. And, a lot of people are asking, and the title of this show too goes along with it, like, is the Bitcoin bottom in? There's a difference between an interim bottom and a macro bottom. I think
I was gonna say maybe for the next week or two, but we'll see.
Right. Yeah. So like this could be an interim bottom where we see a week or two of positive price action following this move down to 65K. We get some positive price action, drives us back up. But I think that, CJ's analysis of the midterm election cycle year really tells you everything you need to know about what we expect to see this year for Bitcoin. I personally won't want to get long until October or September of this calendar year. That historically has been the ideal time frame to do so. And going back to CJ's initial chart with the moving averages on there, the 200-week moving average is historically a level that we see tested during macro cycle bear markets. And I think that we will see that level tested. I think we will break down below that level. And what I'll be looking for is a break back above that 200-week moving average as an opportunity to buy in. I would rather buy into signs of market strength than, try and catch a falling knife and be a contrarian trader here and, try and buy as we still have lots of short-term holders holding at a loss overhead right now. So that being the case, I think that it's best to just wait for a later price action, even with the possibility of an interim reaction rally. I don't like getting long here just based on the technicals and the way people are positioned currently.
Yeah, it's nice to have that guide as kind of the historical context.
Yeah.
But I have some other stuff. And I think it is worth mentioning that we have been talking about October as a potential bottom for the Bitcoin price. But let's just say if there is no counter trend rally, because we do have some gaps up at about 72 and 75K. I think maybe price could get that high in the interim if we are to discuss upside targets in the short term. But if we don't see any type of bounce, and let's say Bitcoin in the equity market just go, straight through 60 to then 50,000, that might actually increase the chances that a bottom is perhaps closer than we might think. A lot of risk assets sometimes bottom in October of the midterm election years, but some of them bottom earlier, as soon as sometimes like July or even May. So I think that it's important to be flexible with that idea, especially if we don't get any type of counter trend rally in the short term and price just sells off, because a lot of cycles can end earlier just because they don't get any interim consolidation or bounces. Something to consider, something to watch for. But yeah, still looking at 60K. We'll see, right? We'll see. Personally, mine's like 40K, but we'll see. Let's see how price goes when we get down there. All right, let's talk about some stock charts.
Let's do it.
Man, I was just talking to Monte before the show. I was very tempted to buy this breakout in Nvidia yesterday prior to earnings. But I think all the bullish news that really people anticipated going in had been priced into the market. They beat earnings in many respects. But just from a technical perspective, I was seeing so many people on social media talking about, price finally closing above this critical resistance level. Maybe this is now the breakout, and what Nvidia could trend higher to maybe the 210 or even 220 levels. So far being rejected, and just a really difficult market in terms of the chop. Not a lot of clear directional trends and breakouts, at least when it comes to like the Qs and major equity indices. RSP remains to be, the key leader. But one thing that we talked about in our member webinar yesterday, or Tuesday, excuse me, was WTI. And, we talked about potential bullish price action in this one. But really, the reason why I was hesitant was because we have this downward trend line of multi-year resistance. Price hasn't been able to close above there yet. And at this point, a few days ago, we had the CCI turning down. We had a significant divergence from the 20-day moving average. But today, price saw a massive flush, went back against the 20-day moving average, and had a very significant reversal. So we've essentially filled these, lower gaps and market inefficiencies to then potentially now consolidate and have that final flush above critical resistance and that breakout. Maybe negotiations and peace talks aren't going as well as maybe initially anticipated. Either way, I think we should always listen to the market. It is always right. So what could it maybe be implying by the price of crude oil currently? We'll see. Either way, in terms of reversals in the market of what I've seen today, this is the strongest thing that stands out. Moving to the last stock chart is just an interesting pattern I've been kind of looking at in IWM, since this has been one of the market leaders aside from RSP. We are in this symmetrical triangle. Traditionally, symmetrical triangles are continuation patterns, but this is one which I would mark out on your chart and just look, watch if we get a close above some of these downward trending, downward resistance trend lines, right? If we get a breakout, maybe we replicate some type of flag like this, that would be somewhat plausible to me, but we're not there yet, right? But the reason why it would be more plausible for me, despite the fact that we've been talking a lot more bearish on stuff like Bitcoin, is when looking at the average midterm year performance, stock chart performance just for the S&P and stocks in general, February, March, and April, usually get a little bit of sell pressure in April, and then a local, macro top in around late April, April 20th specifically. But maybe there's, a little bit more time here. If we do break to the upside for IWM, that's a possibility. Nothing actionable that I'm putting on today or anything, just something that I'm watching in terms of the tape. So any comments or questions? That'd be interesting.
Yeah, no, lots to discuss there. Good stuff, CJ. I did want to just briefly talk about the US dollar because, you talked about oil there and we've been talking a lot about the dollar, but, I like where it's at today and I like what we're seeing out of the dollar. We're seeing strength into weakness. But from a technical perspective, let's take a look at the chart. Taking a look at the chart here, one thing that I will point out is that we are breaking above this 20-period smooth moving average after consolidating at this level for a good period of time here, about 4 days, 5 days. We've been consolidating at this level, failing to break above this 20-period smooth moving average at around 98. But now today we are breaking above that level. And, CJ has done a great job highlighting the historic performance of the DXY during midterm election cycle years. And, I think that this is one that, given the fact that if you take a look at equity markets, basically across the board, all the indices are down over 1%. Then you have the DXY, it's up 0.2%. I think it's worth noting. And I think that, if you're looking for something to invest in that could plausibly provide some solid returns during this tumultuous bearish price action, I think DXY actually is a possible answer for where you can put your capital. I think that, CJ, you did a great job highlighting some of the articles that were published down here in The Economist and in Barron's. We saw the dangerous dollar and the death of the dollar. But, ultimately, I think that this is a good time to take a counter trend position. We've put in a series of higher lows, and it looks like it wants to go higher here. So I'm keeping my eye closely on the US dollar. I think that has the potential to perform very well in this midterm election cycle year. And I want to buy it on a breakout above the 20-period smooth moving average, which is what we're getting today. So I'll be watching that one pretty closely here. I think it's worth a watch at this level, but would love to get your thoughts on that as well.
Yeah. US dollar is still, looking pretty good, and there's not much change in terms of the analysis that we've put into it over the last few weeks regards to the 100 days into the first 100 days into the year, really when the dollar starts picking up and usually doing well in the midterm years. So that's something that just hasn't changed much and kind of continues to work for the foreseeable future. So see if that keeps trending. In terms of the Crypto Clarity Act, that will be likely the most significant U.S. crypto regulation reform ever. It really just gives the industry a lot clearer legal footing and makes it a much more predictable place. Hopefully that will designate a lot of particular projects into things like, are they going to be regulated by the CFTC or SEC? That should ultimately make it much clearer for existing projects. If Coinbase wants to list certain projects, that they'll have a clearer picture of whether they're a commodity or a security. So obviously regulation and regulation by enforcement had been the default SEC method for crypto for some time. But if we have much more consistent regulatory framework, not only from just the SEC, but also from the CFTC, then that just makes things better for crypto, and the innovation ideally should be better. Now I know what you guys care about is this going to make the price go up? And I don't think it changes a whole lot for Bitcoin, because Bitcoin is already very, very established. You can buy it with ETFs. Any, person in their traditional 401k has access to Bitcoin. Bitcoin is the S&P 500 of the crypto industry. So it's very difficult for, if Bitcoin doesn't trend higher, a lot of these alts just aren't going to as well. And I think the act is really great for a long-term perspective, but I think that we're still in the midst of the cycle view, and it's just kind of one small headwind. I think I wouldn't want to overestimate the impact in the short term and underestimate the impact in the long term, because I think it's much more of a long-term thing than maybe necessarily just a short-term move. I don't really see it as a market catalyst to bring things higher, but maybe we do have a little rally to 75K. Monte, do you have any view on, the overall impact of that, Bill?
Yeah, I think you hit it on the head there. But, looking at kind of where we're at from a Bitcoin maturity standpoint, I think that if this bill was passed like 4 years ago, then yeah, this could have had a big impact on price. But if you look at the maturity of the market now, the institutional vehicles for investment already exist and are heavily regulated. So Bitcoin has these means of exposure that are already very regulated, monitored by the SEC and the CFTC through exposure of things like IBIT or other ETFs. So, Bitcoin is at a point in its maturity where, I don't think that much more like regulation and guidance is really required in order for price to go higher. Now, if you were talking like 4 or even 8 years ago, yeah, of course, regulation was a big talking point and it had big implications on price. But I think that now, given the fact that there are so many vehicles for exposure on the S&P, I don't think that you need to necessarily have regulatory clarity in Bitcoin or any bills passed right now. I don't think that they'll have that much of an impact on price. But for the alts, I think it could have a pretty big impact. You mentioned that you often see lots of innovation following regulatory clarity like this. I think that could lead to some new alts emerging as potential, favorites during the reversal in the end of the year. But I think you hit on top of the head when you said you don't want to overestimate its potential in the short term or underestimate its potential in the long term. I think that it is just kind of a blip on the radar, and it could lead to a little bit of a reaction rally. But I think that ultimately we're in the midst of a bear market, and it's going to take a lot more than just regulatory clarity to drive price higher.
Yeah, there needs to be actual innovation and reasons to use these protocols.
Yes.
And the only thing that really has been very popular in terms of use case are stablecoins and prediction markets. Aside from holding Bitcoin as digital gold or whatever you want to call it, there hasn't been, think about how many times you probably use AI or ChatGPT or Claude like in your day-to-day work. It's just so much more impactful than maybe the tokenization of assets. And even if we do have a massive significant tokenization of assets on Ethereum, I don't know that the price is going to go, I don't think the price is going to go to 60,000 even if you tokenize $1 trillion of value onto Ethereum. That's not how it works. And the reason why that's not how it works is because we've already seen hundreds of billions of dollars of stable coins tokenized on Ethereum, real world asset tokenization on that ledger within the last 2 to 3 years. And the thing couldn't even make a new all-time high from 2021. So, if tokenization and the addition of stable coins isn't going to get Ethereum to go up, I'm not really sure what will in the next bull market other than hype and very low interest rates.
Yeah.
But and a narrative. But right now, yeah, it's good long term. I don't really know what to make of it in the short term. Little short squeeze yesterday, but I don't think it's anything massively significant yet. So we'll see.
Yeah, agreed. And you mentioned stablecoins there. One thing I did want to briefly mention today is the fact that we are seeing incredible outflows in the stablecoin market. Taking a look at USDT here, you can see that it's fallen off a cliff in terms of the 60-day market cap change. It's now gone negative. Historically, that's led to periods of positive price action, most notably January of 2023. The 60-day market cap went to negative 3.22 billion. That acted as a market bottom. We saw price go higher, and then ultimately we saw the stablecoin market cap return. But as you can see, this is a pretty steep drop off in USDT. Now, does that mean that we are going to see the same thing we saw here? No, I don't think so. The market's in a much different place. And one thing that I think that this can tell you, although it's kind of hinting at the fact that this may be a potential bottom here for Bitcoin, but USDT can be viewed as kind of the dry powder that is the firing mechanism for price action, right? So whenever you have a large amount held in USDT or USDC, that is plausibly going to be invested into crypto. It's usually people move into stable coins and then move back into crypto to speculate, and use stable coins as kind of a safe haven for any fluctuations in price. But right now, there's just not a lot of people holding stable coins, and I think that can result in a kind of lackluster positive price action, because without that injection of capital of altcoins, Bitcoin's going to have a really tough time getting going. So just looking at that chart, I think is pretty interesting. Given the fact that we've seen such a big change in the 60-day market cap of USDT. Historically, we get a little bit of a reaction rally following a move that big. But I think this time around, given the circumstances of kind of where we're at in this market cycle, I think that we have to look to the downside. Things are much different now than they were in January of 2025. And we need to prepare for more continued negative price action, because that's what we've seen historically in midterm election cycle years. So thought that was an interesting chart to bring up, but I wouldn't put too much credence in the stablecoin market cap marking a bottom for Bitcoin.
Yeah, that chart, all the bottoms were, since 2022. So obviously, it'd been that context only occurred during a bull market. Also, I was just looking, Poly Market and Kalshi in combination have about $7 billion worth of total volume. And all of that is stable coins. I talked about prediction markets being one of the key innovations of like the crypto market over the last year or two, but it's not really like an innovation. It's just a regulatory loophole. But I think you could make the argument that a lot of the stable coins that maybe used to serve as dry powder to the crypto market in previous cycles are really just being used for things like prediction markets and not necessarily going back into the altcoin market. Because if you make a bet on Poly Market, your stable coins just sit there, right? They're not going back into the altcoin market. And maybe you're making a bet on Bitcoin or something like that, but it's not being injected into the market. It's either just staying in your wallet on those particular sites, or you're withdrawing it and sending it back to your bank account. So I think that we have to understand like how stable coins are being used in that particular context, because we just have some new stuff this time around. So it's important to be aware of it.
Absolutely. Anything else you'd like to add before we wrap things up?
No, just that I appreciate everybody's participation. I hope you guys are having a great week out there. Always interesting times, especially with this week. I know we got the silver delivery tomorrow, so that should be a very interesting day, maybe one for the books. Either way, I'm going to be paying attention to that very carefully. But if you guys would like to get more research reports, trade ideas, our member webinar, I'm going to start doing a lot more single stock kind of fundamental research papers as well. I'm going to start this weekend with one on Riot. But if you guys just want to try that for free, 2 weeks, check out the QR code in the link below. Otherwise, hope you guys are having a great day, and we'll talk again soon.
Thanks for watching, everyone.